Ever heard the term ETF and wondered what it actually means? ETFs are one of the most popular ways to invest today, but many beginners don't fully understand them. In this video, we'll break down what an ETF is, how it works, and why investors love them. ETF stands for Exchange Traded Fund. Think of it like a basket that holds a collection of different investments, such as stocks, bonds, or commodities. Instead of buying one company's stock, like Apple or Tesla, an ETF lets you invest in many companies at once. Here's the key. ETFs trade on stock exchanges, just like regular stocks. You can buy and sell them throughout the day at market prices. When you buy one share of an ETF, you're actually owning a small piece of all the investments inside that basket. For example, an S&P 500 ETF contains the 500 largest companies in the US. By buying just one ETF, you're instantly diversified across hundreds of businesses. Some ETFs track entire stock markets, some focus on specific industries like technology or healthcare, and others even track things like gold or real estate. ETFs have become extremely popular for a few big reasons. Diversification. Instead of putting all your eggs in one basket, ETFs spread out your risk. Lower costs. Most ETFs have low fees compared to mutual funds. Flexibility. You can buy and sell them at any time during market hours. Transparency. Many ETFs publish their holdings daily, so you know exactly what you own. In short, ETFs make investing simpler and safer for beginners and pros alike. Of course, ETFs aren't risk-free. The value of your ETF still goes up and down with the market. Some niche ETFs can also be riskier or more expensive. That's why it's important to understand what's inside your ETF before you buy. An ETF is simply a basket of investments you can trade like a stock, making it one of the easiest ways to diversify and grow your money. If this video helped you understand ETFs, don't forget to like, subscribe, and share it with someone who's just starting their investing journey.